I wanted to start today to just kind of outline procedurally how we're going to proceed here. This event will be an hour and a half long. I will be the moderator. My name is Brian Jardine. I'm the managing partner of the Wolf Tice office in Bucharest. We're joined, besides with my colleagues from Wolf Tice, we're very honored to have representatives from Knight Frank, which is a leading real estate brokerage and advisory firm on the Romanian market. So we're very pleased to have senior representatives from Knight Frank here today to try and address some of the questions I'll be posing to the panelists, in addition to responding to your questions. In that regard, the way we've structured this is we'll do an hour of presentation. You all have the ability to direct questions to me. We have in the panel here, or on the screen, you have two options. You have a chat box and you have a Q&A box. We would ask you to please direct your questions through the Q&A tool. What this means is you simply would type your name, and if you have a particular individual to whom you would like to address that question, then please do so. And just want to make sure my Q&A is opening. Yeah, there we go. So you will be able to address those questions. I would ask you, if you can, to put your name and to whom you would want to address the question, if it's a particular panelist or just generally the panel or the Wolf Tice or to Knight Frank, and we will endeavor to respond to all of those questions. However, we'll only have 30 minutes reserved at the end of this session to address those. But if we don't get through all the questions, it's important to put your name, because the panelist to whom you've directed your question will endeavor to respond to that question at the conclusion or in the next day or two after the webinar events. Be assured that all questions will be anonymized, so we will not indicate who is asking the questions if you want to be completely candid. Moreover, although we are recording this, we are only recording this for the purposes of the panelists. None of the participants are being recorded. You will not have the ability to speak. Your names will not be disclosed to other participants. So we are recording this, but the participants will not be recorded in any way. Again, this is simply to assist us as a tool to evaluate, how the webinar went and to determine how we may improve for future events. So with that said, again, I would encourage you, you can ask the questions as we're going through this hour-long presentation, and that will sort of cue the questions up. I will answer in the order received, and as I said, we'll try and get through as many of your questions as possible. But in the meantime, what I'd like to do now is to introduce the representatives that we're very pleased to have participating here at today's webinar event. The first I would ask on the side of Knight Frank. Yeah, I think could we...
Aber der Haken ist nicht drinnen.
Mute.
Ich tu mal auch schnell als Teilnehmer, ja?
Hello, could we mute, please? Thank you very much. I would ask then to introduce from Knight Frank, if Horatio Florescu, who is the chairman and CEO for Knight Frank in Romania and Hungary, and who we're honored to have present here with us today, if he could say a few words about himself, about what Knight Frank is doing in Romania, and also introduce and allow his colleagues Alin Popa, who's the head of residential, and Mr. Valentin Lupu, who's associate director and in the capital markets group, to also briefly introduce themselves. And then I'll ask my colleagues from Wolf Tice to then introduce themselves before we kick it off. So Horatio, if you could please.
So Brian, thank you first of all for the webinar organized together. In our case, we are at the office working for the last month. And as I'm working in the industry for the last 22 years, and my specialty is, other than running these two countries with office visit, landlord rep and tenant representation, I have here, and I will answer to the questions related to the office part. I have here also my colleagues, like Valentin Lupu from the capital markets department, and Alin Popa from the residential department. Definitely being two of the departments involved in the last 9 months in the transaction in our company and in the market.
Thank you, Horacio, very much. Obviously, I almost have to say, in your case, he needs no introduction because we all know you very well and you've been very active. I would ask you if Alin Popa could say just a couple of words about himself and his practice, and then I would ask Valentin to do the same.
Hello. So, as you mentioned, my name is Alin Popa. I've been working in real estate for the past 11 years, out of which 5 of them I spend them, and I'm currently working at Knight Frank Romania. My background obviously is in residential. I also had some, let's say, some transactions in commercial real estate, but my main focus is on residential. Me and my team, we in Bucharest, we are doing high-end residential, and we have some of the, let's say, in my opinion, most interesting projects on the market. Thank you.
Thanks, Alin. And Valentin, maybe a few words about yourself.
Morning, everyone. So, as you mentioned, I'm heading the capital markets department in Knight Frank for the past 6 years. I have quite a strong background on transactions and mergers and acquisitions. And yeah, my main focus lately was on real estate transactions. Thank you,
Valentin. Now I would ask my colleagues from Wolf Tice if they could also briefly introduce themselves before we jump right in here with some of the questions that have been posed to the panelists. Claudia Kipper, could you please introduce yourself? And then Mr. Flavio Nano, please say a few words about yourself after Claudia has spoken.
Sure. Thank you, Brian. Good morning. My name is Claudia Kipper. I'm the head of the Banking and Finance and Capital Markets practice in Bucharest. Been with the firm for more than 11 years now. And yeah, we're mainly doing real estate transactions or project financing, but also capital markets transactions, especially debt capital markets. So I'm happy to have the chat today and looking forward to it.
Thank you, Claudia. Flavio, could you introduce yourself?
Hello, everyone. I'm Flavio Nano. I am coordinating from an operational perspective the real estate and construction practice of Wolf Tice Bucharest. I am a lawyer with 20 years of experience, out of which 15 in the real estate. But I have also some strong background also on financing. And basically, together with my team, we are securing for our clients full types of services, acquisitions, leases, development, construction contracts, for a significant period of time.
Excellent. Well, thank you, Flavio. And as I mentioned briefly, my name is Brian Jardine. I'm the managing partner of the Wolf Tice office in Bucharest. I've been a lawyer for 30 years, 22 of which has been in Central and Eastern Europe, primarily in Romania, but also some time spent in Hungary in the early 2000s. Okay, what I'd like to do now is kick right off, and I'm going to direct this question. Perhaps, Horacio, you'd be the most appropriate person to answer this question. And really, the question is a general one. And how has your life in the real estate agency at Knight Frank really evolved and developed in the past 9 months since the COVID epidemic has hit the market? And, what has been your response and reaction to that? And what is your expectation on how we'll finish out Q4 and positioning yourselves for the, 2021 and beyond? Just a few words about what you're seeing and what you're anticipating.
So at the beginning, if in the first 3 months, March to June, all of us, we had in the industry, and my colleagues, we had a lot of time working from home and a lot of calls. I realized that I was working more staying home than coming to the office at the time, After starting with the end of June, we came back to the office and we are working like in the old times, of course, taking all the measurements of COVID. So realizing that normally coming to the office and spending sometimes 1 hour between going to meetings, we are less productive than staying home. But in our industry, as any consultant, we need to meet the client, and we need after this, and we need to interact after this between each other with the colleagues in order to come with ideas or to create common teams. What's happening in our case is like in all the other industries. I suppose that we are in this also as a fellow consultant. It's a crisis, whatever it's economical or sanitary crisis. Most of our clients, partners, they don't know what to do and they don't know how to react. I remember 2009 it was the same. The first 6 months, 9 months, 1 year. Our clients, they don't know how to react. Starting with the effervescence of not using the space and being so new of having the office space ready and only 10% of the people to occupy the space. In that case, the first 3 months of the first 3 months of the lockdown, I had a lot of clients announcing that definitely they are looking to give back half of their premises, 75%, 60%, so like large numbers. And everybody was saying that the office definitely is dead. Yeah? Who will move to the office is who. But after this, slowly by slowly, the majority of our clients, they understand that this is a temporary situation. That yes, this situation changed the perception of the people and of multinational that we can work also from home or we can work remotely sometimes. That is, this is different from industry to industry. You can hear that somebody is building an office building close to my office, and there is a bit of noise. So it means like still developers are building they are continuing their project. And also what we are seeing, this is happening month by month, that a lot of our clients, they are looking carefully now to what would be the necessary surface. I'm talking about the one which they need to use it due to the existing contracts in place, which they need to be followed until the end of the term. And I had discussion with big multinational clients of ours. They are saying that yes, we are looking to decrease our space to 20%. According to one of our global studies, the number is 24%. But you need to look also in what part of the world these numbers will apply. But yeah, the demand for the space decreased with between 20 to 30% for some organizations. Other ones, the IT business, which normally the IT demand is the largest one in Romania until now, with almost half in the last 10 years. The demand came really from the IT. Romania.
Let me, if I may, sorry, Horacio, not to interrupt, but you're actually anticipating my next question. So what I wanted to do was just sort of get a framework of how your particular business is, and then I want to break it down and get into office and also speaking with Aline to get some more insight onto the residential market. So if you could park that just for a second, because I want to shift gears. I want to ask the folks from Wolf Tice, again, generally, without getting into specifics, what has been the impact of the COVID on your activity in the law office? And I'm thinking in particular about, as Horacio mentioned, interacting with clients, efficiencies of home versus the office, just generally how you've seen this impacting, if at all. I mean, obviously it's impacted in the day-to-day, but in terms of the day-to-day, but also generally on business as a law firm. So maybe if Claudia or Flavio, you could field that question, please.
Sure. I think the first thing to say is that there are two elements. One, the personal one, because we had to work from home. So that was the change. But luckily, both sides can work completely remotely. So that hasn't been an effect over the clients across the board. And otherwise, from a professional perspective, I think we've seen a lot of work, especially related to the COVID-19 triggers. So we've had a lot of work related to the moratoriums. We had a lot of work related to employment issues, but also other real estate aspects, which Flavio will cover shortly. So just to put it in a nutshell, I think there are two things. One, we started working from home, but now we're back into the office gradually. Whereas from from a transactional perspective, we started to see a shift towards doing everything online. And the good news was that this was accompanied basically by public authorities accepting online submissions and so on, which made life actually easier. So it's daunting that we had to have COVID to get to this point where public authorities now accept electronic signatures, accept electronic submissions. So I think this is, in a nutshell, the major effects that we've seen. And maybe on the real estate side, Flavio, you want to have a bit of a more flavor?
Yeah. Well, first, on a general aspect, what I want to emphasize is that we learned during this period. I mean, this period was very interesting for us because we learned, how to do, as Claudia mentioned, how to do a lot of things from distance, to not only to work but to manage projects. We managed to stay in contact with clients. We managed to organize meetings, participate in events and seminars such as this, and we even learned how to do transactions, to sign, to negotiate, and to close the transaction. So from this perspective, even if it was a little bit of paradigm shift, as Claudia said, for us the business continued as usual. That being said, we cannot say that we did not miss, let's say, the good old time handshake between business partners and with our clients. And I think also during this period, but also for the future, contact will remain still an active issue because it helps keeping the team together, getting the sense of belonging to the firm, and perhaps upholding the values of the firm.
Okay, thank you very much for that insight. I appreciate that. And actually, now I want to go back to what Horacio was starting to touch on. Horacio, you were mentioning about the impact of COVID-19 really on the market itself, and specifically what I wonder, and I'll direct this question to you in respect of the office market, and perhaps Aline could pick up on the residential side. But the question was, generally, again, without getting into too much detail, but generally, how did COVID-19 affect the sort of demand, prices, and new pipelines? So you had started to touch on this in your prior sort of comments, but maybe you could elaborate a bit more on that on the office side, and then I would ask Ali to jump in with his observations on the residential market.
So in terms of the supply, what we need to acknowledge and to understand that the life of an office building is normally taking between 3 to 4 years for a developer, starting with the permitting until he's finalizing the construction. It depends where it's located in the city. So for the building to have delivery for 2020, normally it's the developer to start to build, or to think to build and to get the permitting, to receive the permit in 2016, 2017. Yes, so the buildings to be finished 2021, 2022, they are the ones which already have permitting or already they started. What will happen with some of them will be delays. The ones which already they signed pre-lease agreement with obligation to deliver in certain time, like a part of our clients, they are under construction, and I can say that if our viewers or whatever, they are traveling in the city, and understand that Speedwell is under construction, having a pre-lease, Portland also, Athens, the two new projects in Dacia 1 and the Texpo, the other projects in the city that are under construction. Why? Because they secure the lease and they need to deliver in a certain time. As I said, not to mention also other developers, Forte, One United, and now, in terms of the market, if I need to compare the first half of 2020 with the first half of 2019, we can say that we are half. So last year we had 110 transactions in the first 6 months. This year we have only 66. And we believe that until end of the year, we'll end up having like 40%, 40 to 43% of the number of the transactions closed or signed in 2019. Why? As I said it, a lot of the transactions, a lot of deals are on hold. Companies, they don't know what to do if their contract will not expire very soon. Second of all, we have a lot of decision in our industry in offices, in order to choose an office building. A lot of time you need to have a discussion or a viewing tour with somebody specialized in real estate. And if you are looking from where our clients are coming, and it is US, they cannot travel. And this market is until now is not working so easy in order to do like a virtual tour with somebody from Palo Alto and that one to say we are choosing that building because we are not so advanced. They prefer to come to see the buildings, to talk with the people, to talk with consultants, talking about lawyers, Big Four and all the other ones, to understand if it's making sense to open a new operation, and after this also to understand the buildings from technical perspective. Not everything can be done virtual. We are not such an advanced market. We are not in Canada, and if you want to see the plans of any building in the city, you go to the city hall on the line and you can understand it, any plans for any buildings, the blueprints and everything. We are not there yet. Yeah? Second of all, so other than half of the transactions, we can tell that in case of Budapest, compared with Bucharest, it wasn't so hit like us. Somehow, and also definitely the market is larger than Bucharest. It's like, to give you an idea, Budapest is approximately 4.5 million square meters, including A and B plus. Bucharest 3.2. Sofia, the same. Sofia and Belgrade, they are in the same basket like us. Means the things are not happening or they are on hold for some of the clients, some of the tenants. Now we had a lot of renewals, which it's understandable because when you don't know what to do or you expect bad times, first of all you go to the landlord, you try to give him something which normally is renewing the contract, asking him to take some space back if you want. And also asking some rent-free or loan contribution to refurbish the space. Of course, in exchange, you need to offer something. Other than then you have a perfect landlord which will not ask you nothing. And there are very few on the market, the perfect ones, or the very understandable. But yes, until now, from these numbers, 57% were renewals, 20% relocations. We had a couple of pre-leases signed until March. We had pre-leases signed from March until September, so until beginning of this month. And we'll see today the numbers which are coming from our research forum for Q3 2020. But we are expecting, as I said, the market to be half. The medium transaction until now in Bucharest, it was 1,800 square meters. Now it's 1,500 square meters. Mm-hmm. Budapest is staying better.
Yeah, it's interesting. It's interesting that the way you describe this because many of us have seen this, and we'll hear from my colleagues about especially I thought you touched on a very interesting point about this initial reaction and attempt to renegotiate. But before we go into that on the office, I'm just curious if Aline could pick up on the residential side, because my own personal sense, and I don't base this on anything other than sort of anecdotally what I'm feeling in the market, but it seems like residential is still moving ahead. We're seeing a lot of high-end projects that have been announced or being brought to market. I actually read an article where a developer that was looking at developing an office park project decided they wanted to convert it to residential. I mean, is that sense of mine correct? Is there a feeling that residential is becoming or continuing to be popular even as office is taking a hit? And secondly, a second sort of sub-question to Aline on that is, are you seeing a migration away from apartment projects? Because we saw during COVID, during the shutdown, many people, preferring to have homes where they could have a yard where they could socially distance And I'm wondering if you're seeing that impacting the residential, where new projects may sort of merge towards single unit residential homes as opposed to the traditional apartments. Could you address what you're seeing in residential? Because I think that will be interesting to contrast with what Horacio described on the office side.
Yes. So first of all, I want to say that we are witnessing a revolution on the real estate market, and we've been involved in this switch, and in this trend on the market with having office buildings next to residential buildings. So if you look at let's say the past 5 years, most of the development, or most of the most active developers, they considered, when they were buying a land plot, they considered a mixed-use project, both office buildings and residential. So before the pandemic, we were walking towards this tendency. We had this tendency to minimize the distance between the working spaces and the residential spaces. But now, let's say this year, we were forced to accelerate this process even faster, and we are witnessing a change. Of course, as I mentioned in my previous thought, I don't see that this switch being everyone at this point. Everyone is very happy. We are working from home. The companies are happy to let's say discuss, renegotiate the rent with their owners, and then the employees are working from home. But if we analyze the credits, the loans that were accessed in Romania, 65% of these loans were accessed for social housing, for Prima Casă, programul Prima Casă, as we all know it. So in my opinion, all these people, they work in the big corporations in Bucharest. And I don't think when they accessed these loans, and when they bought their apartment 2 years ago or 1 year ago, I don't think they anticipated 2020 and the fact that we need an extra space at home. So in my opinion, the switch will not be very easy to make. I still think we will need office spaces. From our perspective, we adapted very quickly to the teleworking situation. Of course, our clients did the same. I'm happy to say that during the 3 months of lockdown, in each month we signed transactions. To give you an example, we launched a pre-sales program. We launched one of our projects in Băneasa area, developed by Speedwell. So from February until today, we managed to sell 45% of the launched stock, including, as I mentioned, sales during the lockdown, which in my opinion is an encouraging thing for the residential market. In terms of demand, of course, we had a setback during the pandemic. A lot of people were, and it's understandable, the number of transactions decreased to, let's say, 40%. But this is the main reason is that people couldn't travel and couldn't physically sign documents. In the same time, I'd like to, let's say, on a positive note, I would like to highlight the fact that the demand for houses with a big garden, or with a yard, or apartments with a large terrace, the demand for units increased during the lockdown. So, in my opinion, there is a balance. Where we lost something, we gained something else. So the market adapted to the situation. And I would
if I may, Aline, sorry to interrupt, but a quick question as a follow-up to that. So are you anticipating that as a demand for houses with gardens will develop, that developers will then shift, and maybe the going towards higher end residential apartments and penthouses will be replaced, or they'll be supplemented by projects which will focus more on, standalone villas or houses that provide the opportunity with an extra space for an office and perhaps a small garden if the pandemic comes back, or if the lockdown has to come back Are you seeing that in the developers reacting on the supply side to this demand, or is it too early?
Yes, most of the developers are analyzing. Depends on the phase of the project. Depending on the phase of the project, some of them are analyzing to switch to, I don't know, or to change the surface of the apartment. Some of them are designing larger surface. Some of them are thinking about larger terrace areas. And of course, as I mentioned earlier, this is in my opinion, a temporary trend. I don't think we will be in this situation forever. You know, it might take 1 or 2 years. So it's very important at this point as a developer to have a good, a solid business plan and to think about, according to the number of units you want to develop. It's important to think about the next 5 or 6 years, not necessarily the next 6 months or 1 year, because we might be tricked to switch, you know, and to change everything, and then in 2 years not to be, you know, the trend could be in a flow. So yeah, of course, the focus at this point, the focus of the developer is to design larger living spaces. So as we speak, we start building smaller apartments, but with an office area included, which wasn't the case before the pandemic. And also, a lot of them switched from block of flats, switched to land or to locations where they can build houses, because the demand is considerably higher right now.
Right. What I want to add here, if I can assist this one, we need to understand that definitely in New York what's happening this one. New York, let's take like an extreme. New York is a market which suffer a lot. We have a lot of people normally that are coming to the office, and what's happening is that all of them they went to Hamptons and they prefer to buy but better to rent a house. So what I'm trying to say is like it's important the developer how much he bought the land, so if he can afford from the block of apartments to build villas, because definitely this will change the price of the property to be sold. Second of all, we need to understand the infrastructure, additional services, because what is not developed, and it's not like in other markets, is the additional services when you have a house. You know, to understand it that it's nice to be secluded, but at the same time you have a lot of services which you need to handle yourself, and you need to find people, you know, to cut the garden, to clean the house, to clean a lot of things, which until now it wasn't so easy. Maybe, and second of all, as Alin said, it's important if the pandemic crisis will keep another 1 year, maybe smart to be for some of the people instead, and if all their lives they are very happy staying in penthouses or in nice apartments, maybe the smartest one is to go to rent a villa, to stay there 1 or 2 years. At the end, to rent a villa is definitely be cheaper than to move each 2 years in a different real estate asset, a house, the different house. And after this, to take the decision if they like to stay to the house, but not to take very, if I can say, quick decisions, only because we believe that it's better to stay in the house. The house is in a comfort. Yeah? Yeah. You don't stay in the middle of. You don't go in the house. You don't have to give a house. Majority they're not taking houses in Bran or somewhere in the middle of the nature, in order to be sure that they are not interacting with people. So better for this kind of potential tenants for real estate is to think, not to take quick decisions, to think and to understand that it's cheaper to go to rent and to stay temporarily somewhere. And after this, if they like to stay in a villa, which is a different life than going to apartments, to change this one. But for a developer which bought the land in order to build tall towers, because this is making sense in terms of the impact of the land on the price, it will be difficult from tomorrow to build villas.
Yeah.
Yes, I think
fair point. I want to do is I want to circle back to something that you touched on, Horacio, which is about the immediate reaction from tenants in particular wanting to renegotiate contractual relationships as a result of the pandemic. And here I've got two questions. One is I would like to address to Flaviu, and really to understand how contractual relationships in this landlord-tenant context have evolved during the pandemic, in particular, examples of what you've seen. And then as a second question directed to Claudia, because we heard from both Horacio and from Aline about the financing, and you changed the destination of a project. And what are you hearing or what are you experiencing in real estate financing and the relationships for developers and others with the banks in the context of COVID? So sort of two, let's say, more legal questions. And the first one, again, maybe Flaviu, you could pick that up on the contractual side. And then Claudia, you could talk to what you're hearing from the banking and finance side.
Thank you, Brian. So I would start by saying something that everybody knows, that this COVID-19 pandemic indeed put a strain on the real estate business at all levels. So the tenants saw their business activity suspended, or limited by orders of the public authorities. Landlords saw the premises closed or disrupted in their normal activity, in the normal flux of visitors. Financing entities could experience disruptions in the normal repayment of the loan, and in general, let's say, developers and contractors were to a certain extent concerned about let's say the general market prospects. So I believe that the initial response, so let's say immediately in the wake of the that have been imposed by the authority, was to look for solutions, in the contract, to look for solution in the statutory provisions. And from one perspective, this gave us the opportunity, let's say, to revise the content of the contract and the content of some legal concepts, such as force majeure or hardship, let's say beyond the traditional scope, such as in FIDI contracts, in PPPs, in transportation. We also got the chance, to revisit, let's say, the contractual mechanism, the risk allocation, and also perhaps the remedies that are available. And at first, we indeed devised, various strategies, to protect the interest of our clients, being tenants or landlords. And indeed, in some cases, notifications were served, payments were suspended, and perhaps in few cases also entire lease agreements were terminated. But what is remarkable, that after this initial phase, everyone understood basically that the only way to get out of this situation is by negotiations, which is the only way that the interest of all the parties involved can be duly taken into account. So what we saw was that people sat at the negotiation table and eventually managed to reach addenda, that would, for example, ensure the survival of the agreements. Of course.
Flavio, sorry, I just want to jump in here real quickly. I want to remind, because I'm seeing we have 40 participants, and I think some of them may have joined late. Apologies for interrupting. I want you to finish that thought. But I just want to take a moment, because we're into the conference here, the webinar. I want to remind all participants that you can ask questions. We're going to reserve 30 minutes after the 12 o'clock hour to answer questions you may have. I haven't received any questions yet. We did test it, so we know the Q&A feature works. So do feel free, again, to address any question to any of the panelists. Just indicate who you are. I won't disclose who you are, but it will assist us if we need to follow up with you specifically to respond to your questions. So again, if you have questions for any of the panelists, we encourage you to start typing those in the Q&A feature, and we'll endeavor to respond to those during the next 30 minutes. But I just want to put that out there. Flavio, again, apologies, I interrupted. Go ahead.
Thank you. No worries, Brian. So I was just saying that in the end, everything boils down to the old good-fashioned, good-faith negotiations, between parties. Of course, every party had to make some concession. There were deferrals of payment, there were rent waivers, there were rent discounts, from the landlords in exchange, for example, for extensions of the lease term. But I believe that in general the objective was reached, and that was the safeguarding of the contractual relationship.
Thanks, Flavio. Now, Claudia, again, if you could take us through on the sort of banking and finance side, that's really where the rubber hits the road here. How are the banks, or how have they been reacting to this? And in particular, are you seeing any additional contractual protections being requested or terms being used that maybe weren't applied in the past, or just generally what you're observing on the finance side?
Mm-hmm. I will split it into, I'll speak first about the banks, but then I also want to touch slightly upon what we've seen happening in terms of residential projects which have been financed before, either by banks or by investment funds via corporate bonds. So for the financing part, luckily enough, we have a rather large variety of projects. So we've seen lenders deal with the hotel industry, and there we've seen them supporting the industry by basically applying the moratorium which the Romanian government had imposed, but then also entering into bilateral negotiations for the future and basically rearranging the financing terms once we get a look after the 31st of December 2020, because that's the period when technically the moratorium protections would end. So for the banks, it's been an adjustment, let's say, because they started negotiations based on the framework which was set by the Romanian government, which was difficult to reach, but then eventually was reached, and then it raised a lot of questions in terms of applications, in terms of to whom it will apply. There were syndicates of banks, Romanian banks and foreign banks, which made things a bit more difficult. But eventually, what has happened was that across the board, they have agreed to apply moratorium laws, or if no moratorium laws have been applied, they have agreed to enter into bilateral negotiations because their economic reality would basically push them towards it. So far, I think the conclusion of what we see is that we've been working a lot on debt restructuring versus new projects. However, there are also banks that have continued to finance, and we just done the transaction with AFI and NEPI, where AFI actually is the largest real estate transaction, which is a bit strange because the year started off very well, and then everything was suspended due to lockdown, and then discussions were resumed, and therefore the transaction did go ahead, which is a sign that banks still had the trust to finance a project, and especially to finance office buildings. We recently closed another deal also on an office building, and also on a number of logistic parks, which are, of course, one of the main drivers in terms of income. So there is a trust in continuing to finance, not at the same high level, but it does happen. In terms of requirements, I think the biggest concern is not knowing how the pandemic will further evolve. I think there is a large, let's say, a scare behind the fact that there may be a second wave. And again, if, let's say, shopping malls will be closed, if there will be a second lockdown like in Israel happened, then it's going to be very hard to anticipate on the financial status. But we also see borrowers now being more careful and minding more, let's say, paying more attention to other belts and suspenders into the agreement, like more of a remedy period, or also agreeing to insurance for the loss of business for a larger period of time rather than a short period of time as it was before. So in terms of where we're heading, when we look at contracts now, there is more of a room for the borrowers to have a certain buffer period versus what has happened versus the previous agreements. But there's also a lot of a push for having an insurance which may cover COVID. This is not the case yet, but there is a push in the industry that COVID-related events would be covered. Hopefully, the market will turn around and change in the next period. But this is what we see bankers trying to alleviate a bit the risk of not knowing how the pandemic will evolve. So that's happening on the banking side. On the investment side, and probably Valentin will maybe pick it up on the next question. But I just wanted to touch a little bit because we've done bonds, corporate bonds for a lot of residential developers like One United, Impact. And they all mentioned, we asked them how did they see the market going, and they all mentioned that things are going well. So there have been some delays for them because of the lockdown and because of delays in terms of construction. But otherwise, it doesn't seem that the request for residential has been affected to such a large extent, and they were quite confident that things will move ahead quite profitably, let's say. So this is it from our side.
Thanks, Claudia. And yeah, indeed, you anticipated. I wanted to bring Valentin Lupu from Knight Frank into the discussion here because you've sort of touched on this, and that's the general, let's say, investment environment. You know, how the banks are reacting on the commercial side. And I would ask Valentin if he could perhaps also touch on some of the trends he's seen on the investment side, if he could.
Thanks, Brian. So what we've seen technically, so the investment activity is like any other businesses. So when this whole thing started, everybody tried to take a step back and see, okay, let's just wait and see how it evolves. We've seen that after the lockdown period and everything, things slowly started to get back to normal, and we've seen transactions like Claudia mentioned that were considered like they have actually were considered failures, but have picked up again. And the general sentiment right now is that people are starting slowly to look again for potentials. The idea is that real estate is an industry which is heavily reliant on debt financing. So even if right now we've seen that the banks are starting to get back to normal in terms of financing in real estate, although the conditions are not the same and the loan to values have increased. So it's another factor that is affecting the market and will not be the same for the next let's say a few months from now. And yeah, there is still interest. We've seen some core investors that have now started to focus on more distressed assets, which is again, it's a normal trend because if you manage to get a better yield, then why not? But they are still looking. So for core products, there are still buyers. For distressed companies or distressed assets, there are a lot of buyers lately. There are a lot of buyers that are looking on the market for distressed assets. It's not the case still. We haven't seen that many distressed assets until now. We'll just wait and see after the moratorium expires if landlords will be able to keep up with their financing obligations. In terms of covenant breaching, because this is another issue that might, let's say, affect the market and lead to distressed properties. If we have covenant breaches, I would say that banks are now more mature than they were in the previous let's say, global financial crisis, and they realize that they might. I mean, if it's the market environment that's dragging the property down, and it's not making sense to distress it even further. If it's an issue with the product as such, then yes, maybe you need to reconsider refinancing or something like that. But if it's a market issue, then it's better to find ways to either restructure the debt or find other solutions, so not to stress the property.
Thanks, Valentin. I wanted to raise a question here for Aline, because it's sort of related to a point that Horacio made earlier, and it's sort of looking at the residential market as it's adapted to, let's say, the COVID situation. And Horacio mentioned that one solution is to, if you've got the penthouse, maybe rent a villa as opposed to buying. And I'm curious if you're seeing your residential department reacting more to sales or lettings on the residential side. And what has sort of been the trend in the residential markets in that regard? Are you indeed seeing people taking an approach like Horacio mentioned is happening in New York, where you keep your apartment in downtown, but you maybe rent something in the suburbs, or is that trend not really caught on yet here in Romania?
So it depends on what market are we looking at, because our department, in terms of lettings, so we have, on one hand, we have corporate lettings, where we work with most of the companies in that bring in Bucharest, let's say, their executives, the top executives, top management. So from that perspective, we've seen a decrease in terms of demand, and that's obvious in a way, because I think that most of the companies, besides deciding to work from home, let's say, canceled traveling or bringing new workforce or top management from outside Romania. So from the corporate lettings perspective, we've seen a decrease. But on the other hand, except those who are, let's say, fortunate to have both an apartment, let's say a penthouse, and a nice villa outside Bucharest, maybe in Snagov or in Pipera or in Banasa. So except these situations, of course, we've seen people trying, let's say, temporary solutions, because as I mentioned earlier, despite that we don't have any predictability in terms of what will happen in the next 6 months or 1 year. Some people are are moving forward and buying a house, and some people are looking for temporary solutions, like leaving the apartment and going in Bucharest outskirts and working on a terrace or on a deck of a villa, which can be rented. So we have cases of clients who decided to opt for a temporary solution.
Thanks, Aline. I wanted to, we're getting into the 12 o'clock, so in theory, we are now going to move. I still have a number of questions, so we can keep this discussion moving forward. But again, I encourage any participants who may have questions, you can type those into the Q&A box. I have not received any yet. I hope we don't have any kind of technical defects here. But if we do, if folks are not able to access that, I would encourage them to send us an email, because any of the panelists would be very happy. We did test the Q&A, so it should be working. But in the meantime, I'll move ahead with another couple questions until I see something coming in from the participants. My next question, I think, Flavio, you alluded to this, and it's about the governmental measures that were taken to try and support, the economy and address the effects of the pandemic. And I'm wondering if you could maybe elaborate on those. And in particular, did you feel that those measures that were taken were sufficient? Were there problems? Were there areas where they could have been improved? Or just generally, what was the experience with some of these governmental measures that were intended to support the economy during this pandemic period?
Thank you very much, Brian. So I will start by saying first that perhaps in contrast with the employment and labor sector, where we saw, let's say, more consistent and coordinated effort, from the Romanian authorities to counteract, let's say, the effects of the pandemic by providing support, material support to both the employers and the employees. I would say that as concerns the real estate market, the response was, let's say, less consistent, less conclusive. Basically, I would say that the government refrained from entering into the, let's say, contractual relationships between, let's say, landlords and tenants, or developers and contractors. And to some extent, I believe this was a good thing, because the parties were managed to solve and to address their problems, by their own. So in terms of actual support that the Romanian government and the authorities, gave to the real estate market, I would nominate maybe a few. So there was an attempt by a law 62/2020 to give a sort of credit to the payment of the rent and the utilities. These were supposed to be paid by the local authorities, and then, after January 1st, 2021, this had to be repaid. Unfortunately, this support scheme never worked, because there were no, as it happens sometimes in Romania, there were no methodological norms implemented until now by the Ministry of Finance. So I believe that was sort of aborted project. There were indeed some changes to the tax code, which allowed landlords to benefit from a discount as concerned their building tax, 50%. The deadline for submission was now on the 16th of September. It was mentioned earlier by some of our speakers, the resumption of the new house Prima Casă program, which was renamed One Family, One House, and I think this would give indeed a boost to the residential sector. And I also believe that everyone is waiting to see that new support scheme, which has been published now for some time by the Romanian government in the form of government emergency ordinance, to the tenants and to landlords in shopping malls, that would aim to cover part of the rent costs during the 3 months lockdown period. So just to sum up, I would say that the response from the Romanian government was mixed one, but I think there are encouraging signs, and I believe that if new support scheme comes indeed into force and is scheduled to do so by the end of the year, that would be a very good thing for the Romanian market.
Thanks, Flavio, for your response. I wanted to actually bring Horacio back in. I had a question for him, if he's available here, or anybody for that matter from Knight Frank could pick this up.
I'm available, yes.
Okay, yes, sorry, Horacio. It's a question about, we're sort of shifting gears. We heard about, the sort of macro picture from Flavio about the government efforts to support, but drilling down at a more micro level, I'm wondering in your business, what sort of virtual and digital tools? You talked about the challenges of, for example, the market not being as sophisticated, trying to, virtually show a building to an investor from Palo Alto. And I'm just wondering how you've been able to react, what sort of digital tools, virtual tools for online viewings, et cetera, have been deployed in the current market, and which ones, do you anticipate in the medium to, let's say, sooner rather than later, so in the short to medium term, and then perhaps even in the longer term as we get into more, sophisticated developments. But just how have you guys been dealing with this, and what tools have you been deploying, and where do you see the trends going with this?
Definitely virtual tool. It's something which is the future. But if we continue, will last another more than what we expected, so more than half of next year. A lot of the developers, they need to understand that they need to invest money in virtual tools, because they need to show the building without to bring the people from US or from whatever part of the world. Yeah? which are approving the location. So you need to invest money in the virtual tour. Now, we just sold a large factory in Hungary, and I can tell you that we are selling it to an Asian investor, and they couldn't travel. So in that case, it was helping us the virtual tour. I believe that my marketing department done that virtual tour with 7, 8, 10,000 euros. There is not a lot of money to be invested in this. Of course, as I said, it's very important what you address and which kind of clientele you have to understand the virtual tour. And I believe that the Romanian market, the Bucharest market, and also the secondary cities, that will be a little bit reluctant to apply this one, and everybody will expect that in 6 to 9 months we go back to the traditional way of seeing buildings, office buildings, and also a lot of time apartments. Yeah. Other than they are not rendering, they are not finishing yet, so they are not finished yet, and that is making sense to do a virtual tour. But the rest market is not so. What happened, not related to the technology, but relating and also to the marketing of the building. We've seen buildings which we understood how important it is to explain to some tenants that you are more safe to the office than maybe home. The new buildings, they change a little bit the technology, and they are investing a bit more money, making the building more safe. And they are using this one definitely thinking to the help of the employees which are coming to work there, but also part of this one, and the big part is the marketing tool. So there are buildings in Bucharest which we are using radiant ceilings. There are buildings in Bucharest which are saying we are not recirculating the air. There are buildings in Bucharest which are investing in they use the HEPA filters. There are buildings in Bucharest which are saying that our building is much safer than maybe, I don't know, a hospital. Yeah. Why? Because this is helping the tenants to understand that their people will be very safe. And this is a good trend. At the same time, it's a very good marketing tool, and maybe it's working more than virtual tools.
Yeah.
We'll have virtual tools if the pandemic will last more than what we are expecting. According to Mr. Trump is waiting the silver bullet now, so if the vaccine will be discovered before the elections, in that case we have a big chance this will be finished in 3 to 6 months from now. If not, it will be still next year. So in that case, we will not have the time to maybe to put it in practice. As I said, our market, whatever is Bucharest or the secondary cities, whatever is Romania or the other countries counted in Europe, we are still a market where the tenant needs to see the product. Mm-hmm. And the decision maker, or the person which normally it will be part of the decision, needs somehow to see the space.
Right.
Like in any law firm, if they have a big headquarters in London or in Vienna or somewhere else, a lot of time you need to wait a colleague of yours, like in my case, to see the building and to say, yes, it's making sense. Yeah.
Listen, I've got a question that just came in, so I'm glad to see our Q&A feature is working. I think this question is most appropriately addressed to Aline. It's a question, will we see an increase of the VAT limit on real estate residential purchases now that the first home max limits have been raised, or will it remain capped at 100K for the 5% to apply? Do you have any insight on that? I think you're on mute, Aline.
Yeah, thank you. So actually, the 5% cap is on 94,000, not on 100K to begin with. The second remark here, I would like to emphasize on what Flavio said earlier, and I'm glad that the government or the loans granted by the government are still on the table of let's say our leaders, because this is a very important aspect for the residential market. So in terms of VAT, I don't want to make any remarks now, because we will have a different year next year. By the end of 2020, I don't think anything will change. I think we will have the 5% cap to limit to 94,000 euros. And this is also important for the middle segment of the market. Okay, and for the next year, as far as I understand, we will have a budget deficit. So I'm afraid that I'm hoping not to have a 24% VAT again. This is my to be honest. Of course, as Flavio mentioned, and I'm happy to see the government is still concerned about the social programs and let's say the granted loans by the state, which means we will still have a decent, let's say, a decent part of the residential market, which is the middle segment and the affordable segment, will continue to let's say develop in the next years.
Thanks, Aline. I've got a question now here for your colleague Valentin. And Valentin, curious what your view is whether the investment market is going to start seeing. You talked briefly about this earlier, but whether you're going to start seeing transactions this year, and if so, what kind of yields and future investment strategies are you expecting? And do we see interest now, renewed interest, or is Romania more attractive for funds now that we know recently it transitioned from a frontier to an emerging market? What are your views on that, or any thoughts you may have in that respect?
Well, the transition to the emerging market has not changed anything in particular. I mean, in my view, the stock exchange is one thing, but until we will have more, let's say, bulletproof legislation in terms of real estate investment trusts or any other legislation that can help developers to raise finance on the stock exchange, then this will not help too much. I mean, as Claudio is mentioning, developers are preferring to do bond issues than to list on the stock exchange. So for the real estate market, this is not really helping for the moment. And frankly, the funds that knew the market are still interested in the market. That's for sure. I've seen lately interest from new funds that were not present on the market. Again, looking for either core plus products or speculative investments, which is, again, it's a good sign. In terms of yields or in terms of pricing mainly, I personally have seen adjustments. So a transaction that was agreed beginning of this year, we are now involved now in a transaction, and there's been a pricing adjustment, and they are still going through with anyway. But the pricing adjustment was not very material. I mean, we are talking about an adjustment of less than 5% on the overall price, which, if you ask me, in terms of yields, okay, it's somewhere around 20 basis points, which is, again, something that you would normally expect I mean, given the circumstances, I would have expected to see even larger adjustments. But again, one big advantage that we have now on the market is that the degree of leverage of the existing developers, existing landlords, is quite small. So they're not pressed to sell at any price. Even if they cannot obtain the price that they are looking, okay, with a within a reasonable margin of adjustment, then they rather not sell. So until now, and until we will have pressure or additional pressure from the landlords or existing landlords to sell at any price, I'm not expecting huge adjustments in terms of pricing. And if we are talking about segments, so by segment, yeah, I mean, if at the beginning of the year we would have expected to see an yield of, for example, for the office segment below 7, so they were pushing below 7. Right now they're not pushing anymore, but they're not 8 and they're not 7.5. So I'm expecting I mean, I've seen there is a balance. Okay, there have been, from buyers, there's been pressure from buyers to improve the pricing, and this is normal. But there's not that many interest from the landlords to sell at any price.
Okay, well, thanks. That's very interesting insight. Thank you for that, Valentin. I'm cognizant of the fact we're getting into sort of the last 20 minutes here, and I want to throw out a question for the legal team there at Wolf Tice. Just a general question, and Claudia or Flavio, feel free to jump in. I'm just curious what your outlook is, looking forward to 2021 from a legal perspective. You talked about some of the challenges we faced, with the COVID hitting without being anticipated. Obviously, now we've been living with this situation since March, and we're all aware of the fact that the disease is still out there. It's not clear. You mentioned in some countries they're already looking at second wave lockdowns. What is your expectation and outlook for 2021 from a legal perspective? And do you see any, legislation on the horizon which may be adopted to try and proactively address the challenges we may face in the year ahead?
I think from my perspective, just very shortly, I think there is still a lot of expectation around the state aid scheme, which now works for a similar scheme, which now works for SMEs, which is implemented by credit institutions. So there is an expectation that will be actually passed rather sooner than later. So I'm talking here about the state aid scheme with a budget of around 800 million euros, which would apply also for large corporates, which is basically split into subsidies and state guarantees. So it's state guarantees and subsidies of interest rates. So that would be one of the measures which would be of great help. To add to that, I think right now there is still an uncertainty of what's going to happen, but we do have elections in Romania, so things are a bit slowed down. And there were no particular measures. We will have parliamentary elections very soon in December. So we do expect some changes there, but do not have yet an anticipation of what will happen in the next year, because the moratorium protection will basically end in December 2020. The borrowers, which have been very careful and are more experienced, have already begun discussing with their banks. Those ones which are in a worse off situation or are not in a position to discuss or haven't thought about it, I think they will have a surprise at the beginning of next year, because I don't think that the economics will pick up so good that they can basically make up for the lost profit of the last year. So I think the consequences, more of a consequences, we will see beginning of next year. So in the first half of next year, there will be, I do expect that there will be a shift and there will be a crystallizing of who's got the deepest issues, and then it will slowly start into going into one class or the other, going into the class of what's potentially being saved, and yes, we keep them, or potentially being a distressed asset, and then considering maybe to put it in a different class and start work out on those particular cases. But I think it's now very early to say. And aside of the state aid measures, which were already implemented for SMEs at a higher speed than for the large corporates, even for the large corporates, the state aid is not enough. I mean, 800 million will just fly by really quickly. Yes, in terms of outlook, I do expect that next year we will continue a lot with restructuring, but that we will definitely start seeing maybe towards the end of the year two things. One, we will start seeing what are really the distressed assets that may be sold and that may become business opportunities for investment funds or any other potential buyers, including incumbent buyers. And secondly, I think we will also see a more of a structured pipeline of new projects or projects which may have been resumed after a while and have been laid asleep due to the COVID crisis. So I think in a nutshell, this is what we would expect from where we stand as lawyers.
I will add just a couple of points, Brian, if I may.
Sure.
apart from what Claudia say, I believe that the Romanian, let's say, business environment and legal environment expects, some of the legislative changes to occur. Some projects were blocked. Some projects were perhaps insufficiently thought through, and they came out in a form that they are not advantageous for the business community, and perhaps they are not, let's say, strictly related to real estate, but are connected to them. And I'm speaking now about the power purchase agreement, in the energy sector, which is awaited by a large, let's say, segment of the investors who are willing to invest into new energy capacities in Romania. I'm sure that at some point, all the real estate lawyers in Romania worked or continue to work into energy. So that would be, let's say, one point of interest. The other one will be the new law that will enter into force in October. Now that which will bring, let's say, more limitations and constraints to the sale of agricultural land. And I believe that, again, as I said, the business community is waiting for a change on that. And perhaps one final point, I believe that the current government is also on a good track as concerns the commencement of public projects, in infrastructure, roads, and everything. And everyone expects that this will continue and will be performed at a sustained rate and a sustained pace in the next period of time, and that would be a significant driver for the economy and the real estate sector as well.
Thank you both for your thoughts on that. We're getting down to the short strokes here, as they say. I want to put just a question, and I want to first of all thank all the panelists for your time and your insight here this morning, and also I want to thank all of the participants for your participation and for the questions you posed. Thank you for that. As I mentioned, if you feel more confident to address those questions to the individual speakers, we'll be circulating follow-up emails. Also, with those follow-up emails, we'll be sending you a written presentation addressing many of the points we've raised here today that's been jointly authored by Knight Frank and by Wolf Tice. We'll encourage you to flip through that document, which we'll send to you in conjunction with that email, and encourage any follow-up questions. Please feel free to reach out to any of the panelists here from Knight Frank or from Wolf Tice. I wanted to ask the panelists of each of you, and I'll start with the folks from Knight Frank, if you could give us, a few thoughts, limiting it to a couple of minutes each, because we want to wrap this up on the half hour. But if you could give me your thoughts on future resolutions or key learnings, both personal and professional, that you've taken away from this whole last 6-7 months of the COVID situation, and next steps that you anticipate to take in your, let's say, practices, whether or in your professional or personal life, what you anticipate, how you resolve to move ahead, and sort of what are the takeaways that you've taken on from this whole COVID situation in your professional and personal lives. So if I can ask Horacio maybe, and then I'll ask the same question to Aline and to Valentin, and then maybe just wrap it up with some thoughts briefly from ourselves. But if you could give me any sort of insight or thoughts you might have on that, Horacio, we'd appreciate it.
So that's my thought. I would like my advice to the landlords is definitely to treat very well their tenants, their existing tenants, and to be flexible with them, with limits, of course, and to try to understand that a lot of times they are not talking with the owners of the company. They are only people working for the bigger company, and they need to be very careful with them and to treat them correct, and to try to understand that they need to bring results to their employers. To the tenants, my advice to majority of them is to understand that if now they believe that office space occupancy is very low, and depending on the industry, we need to understand that if everything is going well next year, in 2022, 2023, they will end up to need the same space which maybe they will use it today. And of course, the workplace will change. We'll have more closed offices, so to be sure that we'll end up what Americans they came back years ago, starting to end up not having so much open space and going to the closed closed offices. I said American because at the end from there is coming the concept of open space, years before, the 70s, the 80s. Also to understand that the minimum terms, it's 5 years in Romania, due to the bank financing and for the rest of the region, but good contract, good terms, you get it to 7 to a 10-year contract. So it's better to have some flexibility in the contract with the developers or your landlord. But you need to understand it that in 2 or 3 years from now, if you end up to use maybe similar size that you're using today, how you will grow. So be very careful in what space and what service you are looking. And also, I can tell that the resolution, I know that it's not end of the year, and maybe I'll have a different speech end of the year before the New Year's Eve. But the resolution, it's the time when normally in our industry we need to understand which are good consultants and which are and can handle this kind of difficult times. So which are the ones which normally they are working easier in good times. And also that in this kind of times, any crisis is bringing a lot of opportunities. So after this pandemic, which pity because it's something related with the health of the people, us and our clients, is not related with economical crisis. Worse. But after this one, a lot of opportunities will come. Thank you.
Thank you for those closing remarks, Horatiu. Greatly appreciated. Obviously, with your experience and insight into the market, it's very valuable indeed. Aline Popa from Knight Frank, do you have any closing thoughts or sort of takeaways from the last 8 months and then looking forward to the future?
Yeah. So starting from the idea that let's say the residential need or the residential client is driven by emotions, and an office client or let's say a commercial client is driven by financial aspects. I've seen in the past months a surprisingly demand on the residential market. So I've seen the behavior and I observed the behavior of the clients, and that's an optimistic fact for me because I met with clients. Of course, they work in big companies. They have their own companies, and I observed them deciding buying an apartment and speaking about their office space in the same time. So in terms of residential, I've seen clients again driven by emotions and not let's say discussing the price. Of course, there are a lot of clients on the market looking for opportunities, and the whole speech or the whole discussion is based on opportunities. But on the other hand, as I mentioned, we had a lot of clients which were only discussing what they like, what they feel about the properties they're about to buy, and not about the price, or we should discuss about negotiating now because we are passing difficult times, which is very encouraging in my opinion. About what Horatiu said, I think again, I think this period and the next one, it's about opportunities. I think it's very important for us, regardless of what we do, if we are we have companies or if we work for companies. I think the most important aspect is to think about moving outside the comfort zone, because going outside the comfort zone is where development stands. So in this idea, I would like to emphasize on this, on stepping outside the comfort zone. And what I would like to say about, let's say, like a forecast for the next period, I presume that the market will be stable, at least in the next 2 years. The price levels of residential today are about 20% lower than what we had in 2007. So in this aspect, and of course we are in a different economic context today. So I'm optimist and realist for the next period.
Thanks, Aline, for sharing your thoughts on that. Valentin, any final comments?
Yeah, so only the key takeaways. So in terms of professional takeaways, this period has taught me that as long as you stay very close to your clients, I mean, as a consultant, as a broker, it's much easier to understand what's their concern and why a deal might fall through. We've seen it personally. We've seen it. Personally, I've seen it in 2 transactions. There was also the AFI and NEPI transaction that was very revealing from this point of view. Personal takeaways: working from home is not for me. That's clear. If I add 2 6-year-olds to the equation, then that's clearly not for me. So I think there are a lot of people that are pretty much on the same page. And even though, after this whole, after people will not be that scared about the virus and everything, but as Horatiu mentioned, maybe we'll have a vaccine, and we will see that most of the people will want to get back to normal. Okay, even if it's not the same normal, the normal that we knew before, and maybe there will be a mix between working from home and going to the office, but most of the people will clearly want to go back to the office.
Yeah, I can echo that. I'm actually taking this call from home because my wife just got back from the United States, and unfortunately we're in the mandatory 14-day quarantine period.
Okay.
I was obligated to do this, and I can tell you with 2 kids homeschooling as a result, it can be a challenge. And I apologize if I had any noise in the background during this. Listen, thanks so much for those thoughts, Valentina. I'm going to ask again my colleagues, Claudia, perhaps you could give us some closing, couple of closing thoughts, and then Flaviu.
Sure. I think the main takeaway that we have from a legal perspective was that first of all, we like the fact that digitalization is now on the forefront. Fortunately enough, we've got a multi-space tool which we can use for our clients, and which can generate templates, or which we can use for financing transactions, where we can upload everything so that everything is basically seen and monitored in real time. I noticed that with the COVID and working from home, this has gained more ground than we had tried to before. So we're happy to see that. I'm happy also to see that we closed even more transactions online now. So everyone is in agreement that we can use the electronic signature. Everyone ordered them, so there's more and more parties who are now using it without having the fear that this may cause any issues and so on. So I think the one takeaway, positive takeaway, is that one. Another takeaway is that we do see parties negotiating and sitting down at the table, which is good, and we do have the opportunity to sit with them and support them on either one side or the other. And I believe that will continue for the time to come. From a personal perspective, I think as a lawyer, I think we were fortunate enough. We've always had the possibility of working from home or from wherever. I think what I'm missing the most is actually being able to interact with clients the way we did before. The human interaction is something that we cannot replace it, no matter how many webinars we do. So I think I'm looking forward to having a cocktail party as we used to have, and for which we were even famous at some point. So yeah, I think this would be, in a positive way, what we're looking forward to.
I'll drink to that. Flaviu, closing thoughts.
Just a few thoughts. So basically, what I would do, I would start and pick up from the 2 key concepts that Claudia mentioned. So the one is flexibility. So basically, I think it's important, and I believe it becomes more important that law firms, and not only law firms but companies in general, show flexibility in terms of structuring their business, managing their personnel, having the right processes online. And the other one is the digitalization. Claudia mentioned one product that we have developed internally, the wolf size space, which has a lot of applications. Without trying to brag about, we are still in process of developing two other products related to lease agreements called Lease IT, and the other one to building contracts, Build IT. So I think this is the path to the future. As far as I'm concerned, I mean, I don't see this as a threat to our profession and a threat in general to the market. I believe that would give us, the opportunity to focus on the things that really matter, for our clients, to concentrate on legal solution and to find an innovative solution, to look at contracts and legal concepts from all angles. And eventually, I believe this would give us the freedom, and the possibility to provide better and faster services for our clients.
Thank you, Flavio. And with that closing comment, this sort of concludes our webinar here today. I want to just take a few moments, or not even a couple of moments, just to make a few concluding remarks. Thanking, first of all, very much Mr. Horacio Florescu, Mr. Alin Popa, Mr. Valentin Lupu from Knight Frank, and for the entire team at Knight Frank that assisted to help put this together. Also want to thank my colleagues Claudia Kieper and Flavio Nanu and our IT and technical and marketing team that assisted to put this together. We heard from Flavio about the IT solutions. I think without some of the IT solutions that we have in place now, God forbid, had this pandemic happened 20 years ago, I don't think we would have had the technical capability to host an event like this. So I do appreciate everybody participating. I appreciate your perseverance. I know sometimes it can be a challenge. As Claudia mentioned, there's nothing that replaces the face-to-face or personal interaction. But while we're in these circumstances, I greatly appreciate the involvement of all the participants. I want to reiterate again what I said earlier, that we will be sending out to each of you that registered for this event a follow-up email thanking you for your participation and providing you with the contact details for all the panelists, so you may direct any bilateral questions to them that you may have. We'll also provide you with a written presentation, a brochure that was prepared jointly by Knight Frank and by Wolf Tice, which addresses, again, many of the points and questions and comments that were brought forth on the panel today. We hope that this will be one in a series. We may do this again, so hopefully we can do maybe the next one in person. But if we do not speak before then, and I wish you all a very successful fourth quarter of 2020, and we look forward to brighter days ahead in 2021. So with that said, again, I want to address my thanks to everybody that participated here today and wish you all success in your business and personal lives in the future. Thank you very much for participating in today's webinar
Brian,
in real estate.
Brian,
Yes,
one minute is like, I would also like to thank my colleague Natalia Gross, which helped us from the marketing perspective communication to arrange all these meetings with your team. Thank you.
Absolutely. Natalia did a tremendous job, and I'd like to also thank Anna Maria Nitsu from our side and our IT team in both Bucharest and Vienna. Thank you all for participating, and again, wishing you all success in the weeks and months ahead. Thank you very much, and stay safe.
Thank you. Bye.
Thank you all.
Yeah.
Bye.